Governor Kathy Hochul is leaning in with both shoulders in her campaign to address car insurance rates with a plan that looks to incentivize good practices, deter fraud, and curtail civil liability. But it is still an open question what the Democratic majorities in the state legislature are willing to go along with, especially considering their trial lawyer patrons are raising fierce objections to the court reforms. For more on the opposition to the governor's agenda, which she is pushing in the context of budget negotiations, we're joined on the Capitol Press Room by Assemblymember Jen Lunsford, a Rochester-area Democrat who spent a decade as a plaintiff attorney. Thanks for visiting us in the studio, Assemblymember.
Always happy to be here.
Well, I guess for starters, do you agree with the premise from the governor that New York has unusually high premiums compared to the national average? Or do you think, as some critics of her plan argue, that New York doesn't have a unique car insurance problem?
Oh, of course we do. I mean, that's objectively verifiable. I can tell you I myself pay far too much for car insurance. And this is absolutely an issue that I think we need to address.
And in terms of the governor's plan, there are, as I pointed out, a number of points. Let's start with where you think she is maybe heading off in the wrong direction, so to speak, in the most egregious way.
So actually, I'm going to take it in the reverse.
Oh, going to go positive.
I think overwhelmingly,
look at you.
We agree.
Building bridges.
Of course. That's what I do, because I spent 12 years as an attorney, and I know how to negotiate.
Here we go.
We agree about the vast majority of the plan. Multi-car, staged car accidents are a real problem. Not only was I a trial attorney for 12 years, first on the defense side and then on the plaintiff side, but through college, I worked for a third-party subrogation firm. I've seen what these claims look like when there's a true criminal enterprise. People towing wrecked cabs to an intersection, 4 people in a car, miraculously all having the same injury regardless of their position, all seeing the same doctors. We have cracked down on these as RICO cases over the years. That's a real thing, and we should not be paying for it. Have at it. You want to make fraud fraudier, which is what much of her criminal changes make? That's fine. You want to take the task force that DFS currently has the authority to undertake to address fraud and give it to the state police? Perhaps they'll be better at it. I'm fine with that. You want to limit the ability for people who are in a car accident in connection with a felony? I'm also fine with that. DUI, rock on. Have at it. Fleeing the scene of a bank robbery? Have at it. My only problem, and I'll tell you, most people's only problem, is with the changes to the CPLR and the insurance law as it pertains to tort liability. And it is not my NISLA patrons that have this problem. I uniquely from my soul have this problem because I know what that looks like in practice. I know how that affects human people. There's 2 provisions. I'm going to get a little into the weeds.
Okay.
You've already done a show on this, so I'm not going to get hugely into it. The issues are the comparative negligence section and the 9180.
We'll talk about the comparative negligence and how it works now.
Sure. So the way New York works, this is called pure comparative negligence versus modified comparative negligence. Those are the issues. In New York, if you are found partially at fault for an accident, but you too have a claim for injury, a valid claim for injury, the 2 parties split their monetary awards based on their percentage of fault. So if I'm 60% at fault, I only get 40% of what I am otherwise entitled to. And if you are 40%, you get 60% of what you're entitled to. So I think the best example of this is a case I actually had. 9-year-old boy walks between 2 parked cars. He's jaywalking. Walks out into the street. A car is speeding, hits him. He's more at fault because he was jaywalking. The other car is partially at fault because they were speeding. However, the boy's injuries are substantial in this situation. Unfortunately, in that case, someone died. Is that boy's family entitled to nothing because he was more at fault for the accident when the other car was also speeding and probably could have stopped earlier if they hadn't been speeding? Earlier when I listened to your show, you're welcome, with NISLA, and, I think you misspoke a little bit when a very rare occasion for you.
That's always been known to happen.
Where you said, if someone's more at fault for the accident, it wouldn't have happened but for them. But it also wouldn't have happened but for the other person.
Oh, sure, but in the example you just gave, that kid doesn't get hit if he doesn't jaywalk or she doesn't jaywalk.
But he also doesn't get hit if the other person's not speeding.
Sure, but if you're going to do a what about game, you can go 8 rounds, and then we're talking about Hillary Clinton's emails at some point. So I think that there are listeners who would say, yes, what a heartbreaking and sympathetic example the Assemblymember gave, but there are probably many more out there where there is not going to be the same level of sympathy, where there might have been something even more egregious that some driver was doing, and maybe they're a two-bit deadbeat, and we're not going to necessarily worry that they don't get a payout in the future.
Well, I think that's what it ultimately comes down to, that they're a two-bit deadbeat. Trial lawyers take a lot of flack because it's very easy to villainize them, because we forget that the people that they help are families, our children, our nurses and construction workers and people with disabilities.
For 30%.
We take the humanity away from them. But what it really comes down to is there's a lot of people that just don't like plaintiffs. They think anyone bringing a lawsuit is trying to get something they're not entitled to.
There's definitely an attitude about that.
I think that's where a lot of the bias comes from. And you know what? To the people who think that, I hope it never happens to you. I hope you never find yourself in a situation where you can't work anymore, or you can't pick up your kid when they're little, or your retirement has been eviscerated because you had to go into debt because of all of your medical issues that were above your no fault. People's lives are destroyed by accidents. And if I could wave a magic wand and give you your hip back or give you your hobbies back, that's what I do. But unfortunately, money's all we got.
So one of the things that the governor frames this as is that this is not about your medical bills, and this is an effort to curtail pain and suffering payouts in a lot of cases, and those don't have necessarily a tie into your potential economic earnings or the medical bills that you've accompanied. This is a more nebulous figure. So what do you think about that idea that this is primarily focused on non-economic damages, the whole host of changes that are being pushed?
So I think people fail to understand what that looks like, because no fault covers medical and lost wages. Pain and suffering, again, it sounds like something you're getting because you want more. But what it does is it replaces things like you now can't get a promotion. You're a construction worker and you've torn your rotator cuff. You're 45 years old. You now have to go get a different job.
Why wouldn't that cover under lost earnings?
Because they're not your actual earnings. How do I know what you would have done in the future? How do I know what your potential?
So go to trial and argue that before a jury.
It's not a special damage. It's part of your future nebulous loss, this future idea that you are going to potentially have other opportunities in your life that are lost. What about you spent, $100,000 on an RV, and you and your wife, you are going to go and you're going to tour the country next year when you retire. And now you can't sit for more than 30 minutes because you had a fusion in your back. Now you can't enjoy your retirement years. Now you and your wife's entire plan is blown to smithereens.
And you don't feel like that's covered under the existing serious injury language?
No.
Because?
No. Oh, well, we're getting into two different things here, but I'll talk about that. But when you're talking about removing pain and suffering, we need to put the humanity on what pain and suffering is. Because again, people think of it as something someone's not entitled to. I can't give you your golden years back. I can't take you back to the time when your kid was 3 and they wanted a piggyback ride, and now you can't give them piggyback rides ever again. Like, there are people who pick their kid up and put them down and get into a car accident and then never pick them up again. And that's real. That's a real loss. And we award that all over the place. A thing about what the governor has done here is she's only changing comparative negligence in car accident cases, which means you'll still have comparative negligence in slip and falls. You'll still have comparative negligence in other kinds of tort situations. Why would we have a different standard in car accidents? And I'll tell you, something that we really need to get at, the changes the governor wants to make in tort law, not in fraud, again, not in felony, have at it. Comparative negligence and serious injury will not have a demonstrable impact on your auto insurance rates. They just won't. They're not big enough. In 12 years, I had one 9180 case. Go ask any trial lawyer if they're making their bones on their 9180 cases. They're not. And I'm not going to say that the class of people that could potentially be left out of the system, could lack access to justice, is worth trading away for a savings I will never see. And I think this is a fundamental difference between where I'm coming from and where the governor's team is coming from. I think they actually believe that this is going to deliver savings because they have been sold a line by the special interests that are helping them. She talks about our special interests. I don't think her ads are paying for themselves.
Sure.
I don't think these are, benevolent donations.
Ride-sharing companies like Uber are very supportive of all of this.
And of course, it's their bottom lines that are best served by that. The savings will...
How do they realize savings? If you say that there isn't a car insurance discount that personal drivers are going to get, is there some reason to believe on the commercial side there's a meaningful benefit?
So I'm a little confused about why so many of the insurance companies and the rideshare companies, some of which I think are self-insured, are so adamant about this tort section. Because again, I don't think it's going to be meaningful savings to them. I really don't. The fraud, yeah, we'll see some savings there. But I think what's happened is a lot of people looked at Florida. Florida made all these tort reform changes, and there were savings to the system. However, most of those changes were made in 2022. Regular people didn't start seeing savings, and minimal savings, until this January. And there's a lot of things about Florida that are different than New York. I would love to talk about them.
That's an understatement.
So I think one of the main differences here, Florida, first off, was about auto and property. Florida represented 9% of the country's insurance claims and 76% of the lawsuits. That suggests some problem. Could that have been bad actor insurance companies disclaiming after a hurricane? Sure. But there's also probably some issues in your tort system. Florida had, in particular, an interesting provision that we do not have here in New York. If your insurance offer was 25% less or more than your ultimate jury award or settlement, the attorney's fees shifted, and the insurance company had to pay the attorney's fees. What? I was practicing in the wrong state, man. That's cuckoo bananas. I cannot even believe that. So the slack in the system in Florida, when you change that law to remove that cost from the insurance company, is huge. In New York, I make money off of what my clients get. I take a percentage of their award. The amount the insurance company pays is the same. My client would be the one who gets less, though. Full disclosure, I haven't practiced in 6 years. So that's another thing. I got no skin in this game. I just believe it. The rules in Florida put that extra cost onto Florida's insurers. So a lot of the ads we're seeing are talking about attorney's fees. And I have to tell you, I was so confused because I was like, the attorney's fees from the contingency fee attorney and the in-house counsel at Nationwide, what are we talking about? And it's because I think that they ported the language from the marketing in Florida and just tried to retrofit it onto New York. But we don't have that rule. So those savings won't be realized. Florida also had a profit cap. If insurance companies were posting a profit of 5% or more, that had to be returned to Florida ratepayers in the form of a thing they actually called like the Florida Insurance Reform Rebate on your auto insurance. I believe Progressive just issued that for the first time. In New York, the governor's plan, she also has a profit cap. It's 21%. And she says DFS has the ability to reduce that. I'd like to see the last time DFS did something like that.
That seems misleading. It seems like if they want to address that 21% number, that they would have to come back to the legislature in the future and actually get that number lowered. At least that was my takeaway from speaking with the acting superintendent.
The governor's office told me they think DFS can do that themselves. I say you could make the profit cap 1%. Let's take a look at the last time an insurance company posted a profit in the state of New York, because you're not going to find it.
And after a quick break, we'll continue our conversation about efforts to bring down car insurance rates in New York with Assemblymember Jen Lunsford, a Rochester-area Democrat. And for more Capitol Press Room content, visit capitolpressroom.org or wherever you download your favorite podcasts. This is WCNY's The Capitol Press Room, and we're continuing our conversation about the governor's plans to bring down car insurance rates in New York. And our guest is Assemblymember Jen Lunsford, a Rochester-area Democrat. And we'll pick up our conversation talking about her critique of the rate-setting process for car insurance companies overseen by the State Department of Financial Services.
If I want to read property or auto and their application for an increase above the 5%, they can just raise it every year without permission. I have to log in to a nationwide database called SURF that is paywalled, that I need a training to get a login for. And frankly, you need like a law degree to understand what you're seeing. But I think it would behoove us to be able to see those without foiling them, just like I can every other kind of insurance's claims for applications, so that I can look at what their parameters are. Like, I'm in Monroe County. Are we still basing our auto insurance claims on the Kia Kid summer when our auto theft rates were 300% what they are today? They can tell me no, but I'd love to see it. And that's, I have a bill. Just and one of the things my bill does is calls for a sunshine law, because I think that would really help us understand what's going into a lot of these rate increases.
Do you think it's fair to make a comparison between the car insurance rates and something like the health insurance marketplace, which is not how people get health insurance if you are, privately employed for the most part? I mean, it seems like it's not necessarily the most apt comparison.
In terms of their generalized business model, that like how insurance works with risk pooling, there's obviously lots of different factors. But how I, as a legislator and as a resident of this state, get to see what you're asking for and why, I don't think there is a difference, especially if the state has the authority to say yes or no. I shouldn't have to have a paywalled login to a nationwide database to be able to look at it. Other kinds of insurance companies don't have that sort of wall between the people and their applications, so why should auto and property?
And what about that claim, though, that car insurance is not a moneymaker here in New York? We've seen about a dozen companies that are writing policies leave New York. We still have, I think, over 150, though. I mean, do you take that argument on face value, or do you think it's not accurate?
So it's interesting because of the way insurance companies talk about profits and liabilities and losses. Losses are done by state, but part of the calculation on losses does not account for what insurance companies earn in the market. Because a lot of people think of insurance like a shoebox, and I'm stealing that line from somebody.
I have never thought of it as a shoebox, but I'll go with you.
Premium money in, claim money comes out. That it's a one for one. But that's not what happens. Insurance companies are regulated by DFS because they're a finance company. That's what they do. They take your money, they invest it in the market, they make more money off of it, and incidental to the making of more money, they pay claims. They are primarily a money-making operation. And you know what? I'm going to deviate a little bit from some of my colleagues. I don't begrudge them that, because you couldn't maintain the economic model if it was just premiums in, claims out. You have to grow the money. That's how it works. However, if you're going to come to me and say, I'm posting a loss in your state, and therefore your premiums have to go up, but you also earned a profit and paid your CEOs a bonus and dividends to your shareholders with the profits you earned off the thing that we don't calculate when we consider your losses, then I have a little bit of a problem with it, because I'm paying for a rate increase while you're posting profits and giving bonuses to people that aren't the ones you serve.
So I want to come back to the review process by the Department of Financial Services, because that was something we brought up when we spoke with them recently, and this is kind of what they had to say about it.
If a carrier asks for a rate change, we receive voluminous data. So we receive their history of claims across their book over the last typically 2 to 5 years in auto. We receive all the details on, the components of litigation costs, the components of investigation costs, which I will say in New York are some of the highest in the country, those components of claims data. We also see trend over time. So how have costs changed over the last 2 years? That's where we see market impacts, like the cost of parts increasing. We also look at all their expenses. So we get details about their contracts with companies to do their IT or to do whatever it is that they need as a business. We review that and we say, are those expenses reasonable to, again, keep rates adequate, not excessive for New Yorkers and for the business? They then are independent actuaries. So we have a team of actuaries, public servants for New York, who review all that data and kind of put it through actuarial models and science and say, is the rate you're requesting reasonable from our perspective? The vast majority of the time, we cut down rate. It's not as big of a, we don't put a press release for every single time we do this, because again, it's constant, it's rolling, but we're constantly looking at those reams of data and trying to keep rates as, again, as low as possible.
So on its face value, that sounds like they're doing everything they should be. Again, and we raised this with them, it's very opaque. I couldn't find as they point out, a press release saying, look how great we did in cutting rates. So why not take that at face value? What is it about either the outcomes or something else that you know about DFS that suggests that is not the full story they're telling or full story that's happening?
Well, I can say I would love to know how often applications for rate increases, again, above the 5% that they can just take without permission, they just do it. And in fact, the way it works in New York, this is a flex band, they don't ask permission for a rate increase, they ask forgiveness. So they could raise it 7%, and then DFS has to come back and say, no, you can't raise it 7%. I'd like to know how often that happens. I don't know. And I have no way of independently verifying it. I also have no reason to think that the superintendent's lying. However, I also know that, say, the fraud task force that the governor wants to create, which I, again, support, right now, you and I pay on our auto insurance into a fund that pays for DFS to do that.
And I guess we should say that she wants to create, it's basically like breathe new life into one that has not been doing its job in a timely or aggressive manner.
Correct. We have been paying for that for years. It goes into a fund. As far as I know, DFS doesn't do anything with it, and then that money's ultimately swept into the general fund.
I thought the money's just been going out to the same spending priorities, and it hasn't been changed at all based on what you would hope would be this task force saying we think money needs to go to this place or that place, or raise some pools and decrease some. I didn't think it was all just going to the general fund.
That's what I was told, and here's the thing. Who knows? It's very hard to tell.
Okay.
So I admit that I could be wrong, but I can tell you it's not going to a fraud task force. And we probably do need a fraud task force. We shouldn't all be paying for fraud. That is a real problem. And I think when you look at things like variable costs that are tied to number of times it happens, like investigation costs are higher in New York. New York is one of the highest population states. Vermont is one of the lowest insurance states. People love to compare New York and Vermont because they're amongst the highest and amongst the lowest, and we share a border. Comparing New York to Vermont is comparing cups to cows. They're completely different things.
You did that on the fly, too. I appreciate that one.
It is having a population that is smaller than some of our assembly districts in population and density. Density is such an enormous contributor to rates of accidents. If you're going to say, oh, well, we have a higher investigation cost in New York, yeah, you investigate substantially more claims. We have higher costs of, say, IT. Yeah, you're managing substantially more claims. Just, insurance company A to insurance company A across states is going to have very, very different costs. So I don't know that that's a fair comparison of what drivers are, but we all know the number one contributor to the cost of insurance increases is repair costs. We're all driving around with a laptop attached to the front of our car. There's no fenders anymore. Every time you have a 10-mile-an-hour fender bender, you got to replace $7,000 worth of stuff. I would love to talk to auto manufacturers about a way to potentially take some of those sensors and move them up. Is there a way to create a real bumper again? I feel like that would reduce our costs tremendously.
Well, and all those parts have become more expensive since the pandemic, although that is not a unique phenomenon to New York and wouldn't explain why New York is higher than other states.
Other than the fact that we have to replace a lot more of them. Populations being larger is a very real factor because we're not doing per capita comparisons. And, in New York, the density is so much higher. People don't appreciate the density of New York City versus other cities. It is tremendously different. Los Angeles County has roughly the same amount of people as New York City in a substantially larger area. New York City has more people than like 23 other states have.
Sure, but if New York City's the problem, why don't I open up Saratoga County Insurance and just write policies for Saratoga County and not worry about New York City?
I would love to do that. That's very interesting, isn't it? But when insurance companies are calculating their losses, they calculate it by state. Now, what they'll do is they'll say, well, you live in a zip code that is denser, so your rates are going to be higher. And that's how they adjust for it. If you're driving around Chemung County versus around Monroe County, you're going to have different rates because the incidences of claims are different based on, real factors, theft and vandalism, incidents of car accidents, things like that.
And we've seen, though, as theft and vandalism instances have gone down in parts of New York, car insurance costs have not gone down at all.
That's correct.
I guess finally, do you think there are opportunities in terms of changing New York's civil liability laws and who can get certain payouts and what people are eligible for? Or do you feel like the status quo as we have it makes sense?
I think the status quo makes sense to some extent. I think the real drivers of rate increases are things like unfair underwriting practices and things that disadvantage individual people more so than lawsuits, because the lawsuits are, for the most part, valid. The tiny edge cases that the governor is targeting with the changes she wants to make in the CPLR and the insurance law are so small that I truly question, and I've asked insurance companies, show me the data that if we change the 9180 rule that you're going to have a meaningful savings, and then show me the guarantee in the governor's budget that those savings will be passed on to me. And I had one insurance company say, well, we've returned X number of dollars to ratepayers over the last few years. And my question to them was, existing ratepayers? Or is that how I save my 15%? The savings get passed on to new customers to lure them over. There's virtually no incentive to stay with an insurance company for more than a couple of years because all of the savings go to bringing in new customers. When you're talking about the 9180 rule, which, for those who don't know, the serious injury threshold in New York requires that if you want to bring a lawsuit for more than your basic economic loss, meaning the $25,000 in no fault that you are entitled to in lost wages and medical, something a lot of people go through in the emergency room now, given increased costs in medical care, you have to prove that you have one of 9 categories of serious injury. There's been a lot of conflation, just due to misunderstanding, not necessarily nefariously, between basic no-fault benefits and what you can sue for. But if you have $30,000, you have to sue for that next 5%. There's 9 categories of serious injury: dismemberment, loss of a fetus, fracture, those things.
Things that are pretty defined.
Yes. 9180 is a sort of catch-all that says if you were unable to perform your customary daily activities for 90 of the 180 days following a car accident, you can potentially qualify. That's very hard to prove. That is not like, hey, I've had back pain, it's been hard to climb the stairs. You also have to have medical evidence of that. You have to have a doctor say you have a disability, that you have a weight limit on what you can lift. Like, there's real, actual medical things that go into that. The catch-all, more often than not, ends up being traumatic brain injuries. All of tort law is compensation for how the gulf between how you were before the accident and how you will be after it for an extended period of time.
Sure.
If we remove the 9180 rule, people with traumatic brain injuries that don't also have a skull fracture, which are things like vestibular migraines, post-concussive syndrome, will have no access to the system.
So, and just to be clear, the governor's team claims that, well, traumatic brain injury is impacting the brain. The brain's an organ. Organ's still in there in that serious injury definition.
Tell me you've never litigated one of these cases without telling me you've never litigated one of these cases. Because I had them tell me that traumatic brain injury was defined as a significant limitation or loss of use of a body part. And I literally laughed out loud. In the comp system, where we have schedule loss of uses and classification injuries, we don't put the brain in the schedule loss of use where you have a percentage loss, because you can't have a percentage loss of use of your brain. That's not how we deal with that. That's not how we define it. I would like to see the case, if someone could show me, where we have a post-concussive case that falls into the significant limitation or loss of use of a body part. One of the problems with the 9180 rule, it can take more than 180 days to get you into a neuropsych to even evaluate post-concussive. I think 9180 is clunky. Most of the attorneys I talk to think it's clunky. Let's talk about it. Let's reevaluate it. I've said I will write you new language that encapsulates traumatic brain and whatever else that we need to talk about to give it more defined parameters. But just throwing 9180 out will disadvantage real people with real injuries who cannot work in the chosen profession they had, who cannot read a book, who cannot hold a conversation. With post-concussive, I've had clients call and I can hear it in their voice. I'll say, like, have you been diagnosed with post-concussive? Because they're searching for words. As much as it feels amorphous, there are medical tests and medical diagnoses that are more amorphous than I can take a picture of the break in your body. And we can't leave those people out of the system. If I thought that there would be meaningful savings, that people would realize, I mean, the governor's saying that we're going to have savings this year. I've had insurance companies say to my face, it's going to be 4 or 5 years.
Yeah.
Patently ridiculous.
Sure. And even DFS has said on our show, first they're going to have to reevaluate and take into consideration years worth of savings. Yeah, it's not.
Even in Florida, it took 4 or 5 years. I really don't think that even if they pass the savings along, that you would see meaningful, noticeable differences. It would be eaten by just natural rate increases. People wouldn't even feel it because the universe of cases in 9180 is negligible. But for the people that need it, it's incredibly important.
Well, we've been speaking with Assemblymember Jen Lunsford. She's a Rochester-area Democrat. Assemblymember, thanks for making the time.
Happy to do it.
Join us again for Capitol Press Room, a production of WCNY Connected, Syracuse.